Support and resistance. Support and resistance are very simple strategies, but they do work in the stock market. Don't let something be discarded just because it's simple. And support and resistance are concepts that have been around for decades, but they still work. So think of resistance like a ceiling. A stock seems to fall at a certain level. Breaking above resistance is bullish. So here's LVGO, and notice it was finding resistance at this 65 level. It came up around it here, it fell. Bumped up against it here, it fell. Next day, couldn't get above it. Here, it looked like it might get above it, and then it fell. Finally, it clears this 65 level on volume, and then it heads higher. So that's the key with breaking resistance. You want to see a stock clear resistance on heavy volume. That's called a breakout, and that's bullish. And many people trade this way. What they'll do is they'll look at a stock that's falling underneath a resistance level, and then they will buy it when it clears that resistance level on volume. And notice LVGO breaks out here above 65, and then it heads higher. Breakouts are a common strategy. And a breakout is when a stock moves past resistance on heavy volume. Let's take a look at some of my recent breakout buys. So here I am at my blog, tlivingstonblog.com, and let's take a look at AMD because this is a strong breakout that I just took today. So AMD here, it had resistance at this 58 range, and then it broke out here on heavy volume. Okay, so it broke out on heavy volume, and you could see the big volume coming in as it clears this 58 range. Notice here, resistance at 58. Here, resistance at 58. Again, resistance at 58. Again, resistance at 58. Finally, it clears it on heavy volume. That is a breakout. So even if you don't know anything about AMD, you could say, look, something's going on here because it couldn't get above 58, and now it's blasting above 58 on heavy volume. So that's very bullish. Here's a post of mine from June 3rd, and Square had found resistance at 84.79. And you could read this post here if you'd like later, but I'll just talk about what I liked here. It had resistance around $85, and then it cleared it. And this was a monthly chart, and I noticed that resistance had held over many months, and I liked it that it cleared it. So let's look at what happened with Square. Square here, it had resistance at 85, and then it cleared it here, and it headed higher all the way to 127. So what I use is I use monthly charts, weekly charts, and daily charts. You could see on the previous post, that was a monthly chart, okay? It was a monthly chart, and I noticed over many months, Square could not get above 85. Then, when it cleared 85 down in here, I took a position and notice it heads higher, okay? Because it tells me when a stock finds resistance at, let's say, 85, and it finally can clear it on volume, it tells me people are bullish on the stock. It tells me people feel that this stock is now worth more than $85. In the past, people were selling Square at 85, thinking it's overvalued. Now it's the opposite. People are saying, hey, you know what? Even though it's at 85, now I want to buy it. So that's a bullish sign. Let's look at some of the other stocks. Here I posted about Zoom, and notice Zoom had found resistance here around 180. But I said I really like this chart, and it had resistance at 180, and I felt if it could clear 180, it would go on a strong run. So Zoom, it cleared 180 right in here. Notice had resistance here at 180, a little more resistance here at 180, and it clears that 180 level on heavy volume coming in here, clears 180, goes to 200, and what does Zoom do? It goes to 280. So that's the power of breakouts. A stock is showing you extreme strength. Zoom could not get above 180 at this point. Again, resistance at 180, and when it finally clears that, boom, it heads higher and higher. Excellent chart. Tesla is one we spoke about earlier. Notice the weekly chart here. It had a lot of resistance around 850. And what happens when it clears the 850 level? It clears 850 here. It goes on a strong run to 1800. So that's what happens. Tesla could not get above 850 right around here. And then it clears here on heavy volume here, and it goes on a strong run. So when a stock breaks out, it shows you that it's very bullish and investors are saying, at this level, I still want to buy it. Whereas in the past, they did not want to buy it and they were selling it at that level. There has been a change of character. There's been a change of mindset. So that's why breakouts are very powerful and offer a lot of potential. It shows you an insight into the psychology of traders, that they're bullish on a stock now, whereas in the past, they were selling it at the same exact price. Here's a blog post from May 29th. Microsoft was finding a little resistance here around the 190 range, but I like the way it was setting up when they said, you know what, if Microsoft can clear this 190 range, I think it can go on a strong run higher. And notice Microsoft, it clears that 190 range here. Here was the resistance. Look at the resistance at 190. It clears it here, and there's a little pullback, which happens sometimes, and then Microsoft heads higher. So breakouts, again, are a powerful strategy. Sometimes you'll see a little pullback like this. That's normal to see a pullback to the breakout level. But a breakout shows you strength is happening. And Microsoft continued its strength higher here all the way up to 215. Support is the opposite of resistance. You can think of support like a floor. A stock seems to bottom at a certain level. So notice Lululemon here. It keeps bouncing off this 300 level. It's almost like it's a floor. It comes down here and it bounces off 300. Again, bounces off 300. Again, this day, it falls below 300 intraday during the day, but then it bounces up higher and closes up for the day. Okay, so that was a hammer candle off support. So clearly, this 300 level is support. So what some traders will do is they will buy on a candle like this, a bounce off support. But if a stock loses support and falls below this level, that would be bearish. Okay, so we want to see support hold. We want to see support act like a floor. If something fell through the floor, right, that'd be a bad situation. It's the same thing with the stock. If it falls through support, that's a bad situation. Old resistance can often become new support. Now, why does this happen? This happens because traders miss the breakout and then they buy the pullback to the breakout level. So let's say a stock had resistance at 100. It breaks out above 100. It heads higher for a few days. It goes to 105. Then it pulls back to 100. What happens is the people who missed it the first time when it broke out, they say, oh my gosh, this is my second chance. Let me get into it now at 100 because I'm getting a second chance because I missed the breakout. So old resistance can often become support. So support and resistance can work hand in hand. Let's take a look at a few trades I did recently where old resistance became new support. Here's a post from June 15th, and I talked about SDGR, ONEM, and KNSA, how old resistance was becoming support. So see ONEM here, it broke out above this 28 level here, headed up to 42, and then it pulls back. And notice it stops. It finds support right at that 28 level, okay? Now what happens is there was a breakout and traders missed it. Some traders missed this move and they say, oh my gosh, let me try to buy some more as it returns to that 28 level at this point, okay? So that's old resistance becoming new support. Very similar thing happened down here. SDGR broke out above this point, around 54, headed higher, came down, and it didn't pull back exactly to that level, but it came down towards that 55 level, and then it found support. Same thing, KNSA, broke out here, some sideways action, headed higher, and then pulling back towards that level and finding support at the $20 level. A similar thing happened to work here. Slack Technologies, the symbol is work. Breakout over here around $30. It headed higher, and then it fell, and look at this. It found support right at that $30 level, okay? So this is not a coincidence. What happens is the stock breaks out and people miss it, and when it falls, they say, oh, this is my opportunity to get back, and I may have missed it at 30, but now I can get it again. And notice it hammers off that 30, finds support, and closes at 33 because traders are waiting for this second opportunity to buy at support. Remember, old resistance, 30 was resistance over here. There's a breakout. Now that's old resistance. It often becomes new support. So let's take a look at this with SDGR. And notice, here was the resistance level here, okay? It broke out, it pulled back. The old resistance became support here. The 55 to 60 range became support, and then it heads all the way higher up to 100, okay? So this is the power of support and resistance. Okay, this is a stock going from 55 to 100 pretty quickly, right? So you see a breakout here around this 55 level. It pulls back, and that 60 level becomes support. It doesn't even pull back to the 55 range, and then look what it does. It goes all the way to 100. So that's a big, big move rather quickly, and it's not that complicated. It's just noticing that old resistance can become new support. Moving averages smooth out the price and help determine the trend. A 10-day moving average will average the last 10 days of closing prices and plot that number on a chart. The next day, the average will be plotted again. Connecting these points on a chart will form a moving average. Okay, so let's look at moving averages and support. So here we have in green, the green line here is a 20-day moving average. So what they do is they take the last 20 days prices and they average it out and they put it on the chart. Okay, then they do it the next day. They take the 20 days, most recent days closes, and they average out that price. And they keep doing that every day. They average the last 20 days closing prices and they put it on the chart here. Now, isn't this interesting? The 20-day moving average acts as support. You see right here, LVGO, it falls, it has a hammer candle, and it closes above that 20-day moving average. Over here, bounces off the 20-day. Over here, bounces off the 20-day. Are you seeing the trend here? Over here, bounces off the 20-day. And notice it stays above the 20-day moving average. And this is not a coincidence. Traders wait for this. There are some traders, what they do is they look to buy a stock off the 20-day moving average. Other traders look to buy off the 50-day moving average. I wrote a book on that. It's called Swing Into It on Amazon.com. How I use this blue line, the 50-day moving average, to make trades. So what I want you to see is that these moving averages here, they can often act as support. Okay, so the 20-day moving average is going to be a shorter term trend, and the 50-day moving average is going to be a little bit of a longer trend, and then the 200-day moving average is the very, very long-term trend. So these are popular moving averages. Many traders use them. I would say the most popular are the 10-day moving average, the 20-day, the 50-day, and the 200-day moving average. So the bigger the number, the longer time frame it is. So a 10-day moving average will tell you a short-term trend, a 2-week trend. The reason why I say 2-week trend is there are 5 trading days in a week because the stock market is closed on the weekend. So a 20-day moving average gives you around a monthly trend because there are about 20 trading days in a month. Then you have a 50-day moving average and a 200-day moving average. Okay, so these are very popular, and what traders do is they look to buy off these moving averages. They're making a bet that they're going to bounce off support. So what some traders will do is they'll buy something like this on here off the 20-day, and they'll say, you know what, I'll hold this as long as it's above the 20-day, and I'll sell it if it goes below the 20-day. Okay, so moving averages can also act as support, and I'm going to show you later on in the course how to set this up for free, how to go to stockcharts.com and how to put this into your charts so that you can look up a stock and you can see the moving averages. Moving averages can also act as resistance. Now look at JetBlue here. Okay, it goes on a great run. And look at this, it stops right at the 200-day moving average. The red line here is the 200-day moving average, okay? The blue line is the 50-day moving average, and the green line is the 20-day moving average. So notice this, it stops exactly at it 2 times. It finds resistance on this day, and the next day again finds resistance, and then it heads lower. Now, I don't short, but people who go short, what they often will do is they will look for something like this that's resistance, and they will short a stock at resistance, betting that it will fall. Now, if you did that with this, you'd short it up here around 14 or 15, and then you get a nice run lower here. But that's not something I currently do. I really only go long, but short traders, what they'll look to do is they'll look to sell short a stock at resistance, because a moving average can often become major resistance. Moving averages can act as support, and they also can act as resistance. By resistance, remember, I mean a ceiling. It's almost like JetBlue can't get above this 200-day moving average. It's becoming major resistance. There are 2 types of moving averages, simple moving averages and exponential moving averages. A simple moving average is based just on the closing price. Exponential moving averages give more weight to more recent data. Honestly, I use simple moving averages. I don't think it's that big of a difference. It doesn't really matter that much to me, but I wanted to make sure you understood the distinction. So here you see we have an EMA in green, and we have simple moving averages for the 200-day and for the 50-day. And I want to show you moving averages can become major support. Look at this. NVIDIA finds support at the 200-day here, hammers off the low, close right at the 200-day, and then look how it rides that 20-day higher. Okay, so moving averages, they really, really are important, and they can act as major levels of support. Apple, again, rides the 20-day higher. Now, it's not every stock is going to ride the 20-day higher. Okay, so every stock is different, every market is different, but in this particular market in 2020, many of these growth stocks, these tech stocks, are riding their 20-day higher, and they're finding support at the 20-day moving average, which is this green line here. DOCU, again, support off the 20-day. This is not hocus pocus. Look at this. It hammers right off that 20-day here. Again, support off the 20-day. Again, support off the 20-day. Okay, and even support down here. So when you get a very strong uptrend, stocks will find support at their 20-day moving averages, which is what we're seeing here in 2020. And here you see it found support off the 200-day at the March lows. Trend lines. Trends are another way to identify support. And what you do is you connect important lows in a stock. And you could see they will bounce off the trend line. Okay, you get a bounce here, you get a bounce here, you get a bounce here. Personally, I don't really use trend lines as much. I find the moving averages to be more important, but I wanted to make sure you understood what trend lines are. They're pretty easy to draw. You find important support levels and important lows, and stocks will seem to bounce off these levels, but notice it also seems to coincide as well with moving averages. Summary. Although simple, support and resistance can play a major role in trading decisions. A break above resistance on heavy volume tells you something important is happening. A break below support can be a sign of trouble. Buying off support can offer a low-risk opportunity because you're betting that the stock is going to head higher, and if it loses support after you bought off support, you could say, hey, you know what, I made a mistake, and you get out with a small loss. Buying breakouts is a popular strategy since the stock is showing strength, right? So we talked about this. If a stock could not clear 100 and then it clears 100 on volume, it tells you an important clue that people are bullish on the stock and something important is happening.